Hi, this is Sean Brodrick for Uncommon Wisdom Daily. Last week was a wild one in the markets, but now that the holidays are closing in, things should start settling down as traders make plans for the new year. To help you do the same, I'm not going to tell you which stocks you should buy. Instead, I'll tell you about 3 stocks that you don't want Santa to leave in your stocking. The first stock on the naughty list is Nucor, symbol NUE. It's a steel maker with a market cap of nearly $13 billion. Many investors mistakenly include Nucor on their nice list because its earnings have been growing and beating expectations all year. But what they fail to recognize is that Nucor trades at 20.5 times trailing earnings and 13 times forward earnings, pricey compared to other steel makers. In fact, you can see that Nucor recently pushed its head above resistance, but the rally ran out of steam almost immediately. With China slowing down and continued problems in Europe, I think Nucor is going back to revisit its October lows and maybe even lower. The second stock on the naughty list is the newspaper publisher McClatchy, symbol MNI. Many investors think that McClatchy is good because the company told investors it had seen improving trends in advertising. As a result, shorts covered their positions and sent the stock soaring. You can see the huge jump in the weekly chart, but McClatchy is already banging its head on resistance. The fact is, newspapers are to the 21st century what buggy whip manufacturers were to the 20th century, a fast-dying breed. MNI has almost no margin for error and simply can't afford to see revenue fall any further. It dropped 16% in 2008, 23% in 2009, and 7% in 2010, and it's set to drop another 8% this year. Ultimately, I think the stock is going to zero. So if you own it, consider exiting. Finally, stock number 3 on the naughty list is department store chain JCPenney, symbol JCP. A lot of analysts like this stock because of improved consumer spending this holiday season. Plus, JCPenney has recently taken some whacks, so investors consider it a turnaround story. And Bill Ackman, who created Apple's retail store concept, was hired to be JCPenney's CEO. But now for the bad news. At the first real whiff of recession, retailers will tumble into the discount bin. And even compared to other names in the sector, JCPenney is weak. Its gross margin targets will be virtually impossible to hit, and the company has already made some ominous comments about lowering its prices in order to get rid of excess inventory, and that would impact fourth quarter earnings. A look at JCPenney's weekly chart shows that the furious rally since August barely pushed the stock above its 200-day moving average. Meanwhile, it's underperforming the retail index. I think that the potential for a nasty Christmas surprise is rather high. Overall, it's been a great year for subscribers to my red-hot global resources service. I'm looking forward to 2012, and I hope you are too. I'm Sean Brodrick for Uncommon Wisdom Daily. Have a great holiday.